that optimal policy function is not fixed. And that is really the purpose here, is understanding that, hey, this is literally a job. This is a full-time job. I am going to be making these adjustments continuously every day. I don't just find one strategy that works and I'm done. It is all probabilistic, and I'm going to continue to refine and update my edge. If I don't, what's going to happen is something like this with an ineffective policy function. If I am trading a strategy with alpha decay from crowding, if I'm overfitting a backtest to noise, if I'm a discretionary trader and I'm clinging to that one technical strategy that is not performing well in this regime, then my out of sample performance is going to be terrible. This is an ineffective policy. So it all comes down to a policy function. Are you acting optimally in the face of uncertainty? This is not a fixed strategy. This is a collection of actions that dictates your overall risk-adjusted return. This is how we need to look at the space, not just in terms of our simple performance in a backward-looking sense. We need to consider it in a forward-looking sense, because that is going to dictate whether we are actually learning, whether we're going to continue to act optimally, or if we're going to just continue to accumulate negative EV, as we see here with an ineffective policy function. This brings us to the last component of this myth, and that is the idea that nobody shares profitable trading strategies. And I must admit, I find this one quite fun, because it really shows you very quickly whether or not you're dealing with someone that understands this space or not. I see this all the time in my YouTube comment section. Nobody shares a profitable strategy. The edge is going to get crowded out, this, that, the other. And I find it funny because they're not dealing with anywhere near the capital sufficient to crowd the alpha. And even if they could, even if they had the capital, would they be deploying the exact same system to take advantage of the same statistical inefficiency to crowd out that alpha, to crowd out that edge? That is precisely my point here, is saying that sharing a component of a positive EV strategy, a component of an optimal policy function, your pi star, is going to crowd out the edge is utterly outrageous. Now, if we're talking about quantitative like trading, quantitative research specifically, then yes, you can have your alpha crowded in an institutional case when you're dealing with that infrastructure and capital, which is why a lot of times you'll see people on non-competes, you'll see people on garden leave, so they don't just go to another firm and deploy capital to that strategy. But on YouTube, if I'm sharing a general class of strategies with you that you can combine all together in a pi star function to make optimal decisions and improve your edge, no, you're not going to crowd out my or someone else's edge. Largely, I like to think about this in the same way that I think about asking someone to teach me to play baseball. I can tell you the strategy is to hit the fastball, but if you can't swing the bat and connect with the ball, I can't help you. This is why not everyone is a baseball player, and not everyone should be a trader. Not everyone can bear risk. That's what it means to be a trader. And not everyone can make optimal decisions in the face of uncertainty, even if that means cutting losses and changing a strategy. This is not a get-rich-quick scheme. You must have knowledge and experience along with a tolerance for losing money. I can share with you general classes of strategies that work every single day in different capacities. Mean reversion, overstated volatility, momentum, sentiment, but nobody's going to sit there and trade for you. Nobody's going to tell you when to enter, exit, or why, or how to manage your risk, or when it's time to cut those losses. So when somebody says, hey, nobody shares profitable trading strategies, what they really should be saying is nobody is going to trade for you. Yes, that is largely true. I have a great example of this in the context of poker, and this is also why technical analysis can't be disproven outright. And this goes into what we discussed earlier in an uncertain system versus a random system. We can't just run a simple backtest on a technical indicator to see if it works or not. It's going to be a component of your pi star function to aid in decision making. And this really gets at the heart of the trading space. Everything's uncertain, and you always have to adjust and update your assumptions and strategies. That is why it's a full time job. Let's look at this example with poker and pocket aces. So I'm playing Texas Hold'em against 5 people, and I have pocket aces. I have a pair of aces in my hole cards. So, what are the implications of this? Well, the general strategy that I can share with you, if you want to think of it like a general strategy similar to the trading space, mean reversion, overstated vol, momentum, sentiment, whatever it is, the general strategy that I can share with you here is hey, unconditionally, you have less than a 50% chance of winning, which means more than half the time you should fold. Now, that doesn't necessarily mean that that is going to be your optimal decision to make. This is up to your pi star function. So what I have here is an animation of my player wealth path making optimal decisions at the table, bluffing effectively, knowing who I'm playing against, whether they play too tight or too loose. In any case, my raw theoretical probability of winning is actually less than 50%, but my pi star function, my optimal decisions at the table, actually induced what? A 60-40. And I'm able to accumulate much more wealth than I should with the theoretical pocket aces. If you're targeting a role as a trader, market maker, quant, or you're just looking to grow and protect your portfolio in all market climates by applying quantitative strategy, Quant Guild has 2 crazy free resources available to you. When you get started, you can pick your track. You can always change this later. If you're looking to break in, head on over to the Quant Roadmap. Every topic in the right order that you need to know for success in different roles. You can select them here. It will tell you the exact breadth and depth of knowledge you need in each for success in interviews and the career as a whole. And of course, if you're looking to grow and preserve your wealth, you're going to want to run your own personal hedge fund. This isn't a day trading strategy. It's structure institutions use every single day to cut their downside risk in half, improving their overall long run return. I have a free quant research note available to you on this page for exactly what is going on. Link in the description below to Quant Guild if you're interested in these free resources.